So, my name is Jodee Rich, and some of you have already told me that I look like a CEO. So, you're absolutely right. I am the CEO. And if there are any other bald guys in the audience, we're going to have a little picture at the end of all the bald guys. Because I'm into collecting bald guy photos. That's next one. That's Steve, by the way. Stand up, Steve, and say hello. Steve is our megastar entertainment and technology industry lawyer. And we only met for the first time a couple of months ago, but we fell in love. And he took me to the Gratitude Cafe in LA, which is absolutely fantastic. It's in Venice, isn't it? Yeah. Yes. So next time you guys want to go to LA and you need to have dinner with someone, Steve will take you. I've been asking you as you've been walking in what you want to get out of the evening, and most of you have told me that you'd like to hear about our journey. And that's what I'm going to do. I'm going to tell you about our journey, I'll answer your questions, and I'm going to engage you guys. So listen carefully, because I also have a reputation in my family for something called flash cash. And that means that I have a pocket full of $20 notes, not Bitcoin, real $20 notes. And I will be asking you questions, and if you can answer the questions, I will be giving away flash cash. Yay. So, we have a platform called Social OS that creates social networks. That's our core business. And we've earned about $10 million in income over the years by working with big companies and government departments. And the first contract we ever got was with DARPA. Who knows what DARPA is? DARPA? Excellent, almost all of you. DARPA is the Advanced Research Group at the Department of Defense. And they gave us $3.5 million US to build a platform for experimentation on social networks. And that helped get our business started. And that was almost 6 years ago. So we have this core technology that creates social networks. And I'm going to tell you about our journey from day one in creating this crypto product. The white paper that you'll all have access to this evening has taken about 400 hours so far, which is about double what we thought it was. But what's interesting is the engineering itself, the app itself that's built on our platform, has only been 213 hours. So, and if any of you want to tweet about what we're saying, down the bottom is the Twitter handle @Crypto.Ƙred, and I'm Wing Dude. Now, our team who have built this product, we currently have 10 testers, and we're about to go live tonight, 5 engineers, 2 marketers, 7 lawyers, and that's just the ones that I'm paying. There are others. I love free lawyers. 2 advisors and 1 accountant. In fact, our accountant is in the audience somewhere. Todd, will you stand up and say hello? This is Todd, everyone. Todd is amazing. Yay, Todd. I love you, Todd. So the story started in 2012 with Social OS, as I mentioned. We decided in March 2014 that we would start experimenting with Ripple. Who's heard of Ripple? Ripple is a bank-grade blockchain, and we built a digital wallet back in March 2014. And in about August last year, we started thinking about blockchain and how we could use it to create what we call a universal like, a like that transcends all social networks and allows people to own their own data. I think that's what we've ended up creating, and I'm going to show you how that works. Imagine if you owned the like. Imagine if when people liked you, that was your data. And imagine if you could attach value to likes. And imagine if all the revenue that was going into Facebook and Google and those other networks, actually you were getting a share of it. That's what we're trying to achieve. And Brenda, can you come over here for a minute? This is another one of our speakers. Brenda, yay, Brenda, say hello.
Hello.
Brenda, I think, is going to be the next speaker. Brenda is another rock star lawyer. So we have Steve and we have Brenda. Brenda, can you do me a favor? Can you take some pictures of our audience, please? Thank you. So we said, let's build Crypto.Ƙred. And that's the URL, .cred, because we own that top-level domain, .cred. So if you put anything before the .cred, it will resolve on your browser. So Carl is sitting in the front here next to Steve, and Carl.Ƙred sort of has a nice ring to it. When you sign up, you can choose a URL, Carl.Ƙred, no .coms or anything on the end of it. And that can be the address for your coins. So where we've settled is, and my one-liner, we've reduced to 4 words. And for those of you who are building startups, you know the most important thing is to be able to explain to a VC who has ADHD, right, which means he can't concentrate like most VCs, in 4 words what you do. So we are creating a personalized currency for engagement. That is our mission. And that's what I'm going to talk about for the next 10 minutes. The first thing we did, and now I'm at October, I think, Cam, is that right? October 2017 was I hired 2 legal interns for $25 an hour, which, by the way, is the best hourly rate I've been able to achieve on any of my legal team. Right, Steve? That's right, the lowest, thank you. And they reviewed 100 ICO white papers. And who's heard of Tezos? T-E-Z-O-S. So Scott at the back of the room. Scott, can you just yell out to everyone in like less than 30 seconds what happened to Tezos? Yep, and what happened to it? So they currently have 4 class actions, and the SEC is subpoenaing them. But our researchers said Tezos was the best. So this was back a few months ago. I think Scott deserves $20 flash cash for that answer. Can you be my deliverer, please? Yeah. So we did lots of research, and we decided after the research that we were not going to do an ICO. But we've learnt a lot by looking at ICOs. What we're going to do is called a continuous sale. And what I've said to many of you is that we need to turn blockchain from something that people think about as a trading or speculative product into one that really creates value. And so we have created a product on the blockchain that we think creates value. It's not a speculative coin, it's a coin that actually has utility. And luckily, we've now had a lot of advice, and we're not a security. And there's a whole story about that. Who in the audience is interested in doing an ICO or doing crypto? Only one? Okay, finding out? Okay, maybe 20% of you. Well, I'll talk a bit more about that. And so our regulatory research begins, and our blockchain research, our tech research begins, and we've looked at all the different platforms, Raiden, EOS, Neo, Cardano, Stellar, and others. And we started with Ethereum. And I'm going to ask one of you in the audience for $20 flash cash again to tell me about why we didn't end up choosing Ethereum. That is the special meeting that we had, Steve and I, at Gratitude Cafe back in January, Steve. And we had vegetarian curry. And the other thing that we did in November was we all sat around and we said, we want to create a character that represents what we're trying to do. And so if you look around the room, you'll see this is the character, the dude, and he's putting a little hat on a coin. And we had our cartoonist watch Brock Pierce and Vitalik videos. Who knows who Brock Pierce is? Who can tell the audience? Will you tell everyone who Brock Pierce is, please? Not for $20 flash cash.
Brock Pierce is a early Bitcoin, I would say, evangelist. He's like the Bitcoin messiah. And he's famous in the space for having popularized the blockchain development.
Thank you. That's perfect. And he's a bit of a cowboy. And so the cowboy hat is half Brock, and then the geeky looking thing underneath the guy, that's half Vitalik. Vitalik is the person who created Ethereum. And if you speak to these guys, they'll say they want to change the world. So our little dude is changing the world. He's, of course, half Democrat and half Republican. And I'll tell you about my experience in DC last week. And he's geeky, and he's cheeky, and he's a giver, and he's disruptive. And he likes to share. And they're all the things that are important for us in our product. The other thing we did was we did an in-depth review of CryptoKitties. Now, who can tell the audience a little bit about the rise and fall of CryptoKitties? Anyone? Scott, you've already had a go. Anyone else? Who's heard of CryptoKitties? Yes, okay, half of you. So CryptoKitties was really interesting. CryptoKitties came out halfway through our research, and CryptoKitties was a digital asset. And in the space of 9 days, they sold over $5 million worth of little pussycats with like this guy peeking out. And one of those pussycats got sold for $100,000. And then after 9 days, something happened. Who can tell me that? What happened after 9 days of CryptoKitties? Is there someone in the very back? They crashed. What's your name? Tyler. Tyler, you're part of the show. But I think he deserves the $20 flash cash anyway. Please deliver $20 to Tyler. So what happened was they were running on the Ethereum blockchain and it died. 70% of all the traffic ended up being CryptoKitties and it died. And my engineer said to me, Jodee, I told you Ethereum would not be able to scale. So we stopped our development on Ethereum and we then moved to Stellar as a result of that research. So we're now in January, only 2 months ago, which feels like years ago. And in January we had 3 legal teams. Why 3? Because we're releasing a global product. I have to tell you guys, if anyone thinks that releasing an ICO is better than an IPO, I would strongly disagree with that. The amount of regulation that you have to consider is vast. And in the US alone, there are over 50 different regulators that you need to think about, and I'll talk more about that. Anyway, we're very, very lucky tonight because we're doing this around the world. This is the first of 20 cities that we're talking in. We have Steve, who I've introduced you to. We have Brenda, who I've introduced you to. And Steve and Brenda have been very key to all of the work that we've done. And then I'm also going to introduce Jenna later. Jenna, can you jump up and say hello to everyone? Jenna is our tax guru on this. Anyway, by January, our API was ready. So for the developers in the audience, what we've done differently to many other cryptos is we have made an API available to try and encourage developers to actually build their own apps. And we think eventually that will be bigger than our own app. That's me. That's how I was feeling in January about all the legal issues, like almost completely blind. And I took that photo of myself going up the lift at Aspen, going up Ajax, because I was feeling so miserable from all the lawyers that I was having to speak to. Sorry, Steve, but that's how I was feeling. The next thing that we did was I went to a congressional hearing, and now we're just 2 weeks ago, and listened to the congressman interviewing industry leaders. And there was a guy called Congressman Sherman, and I had asked Cameron to find a photo of him. That's Congressman Sherman, right? For $20 flash cash, this is important, you're not allowed to use your phones. Maybe you can cheat if you want to. Would my banker be ready with the flash cash, please? What state, let me tell you, I've got to go back. Congressman Sherman started by saying crypto is crock. And he said it 7 times. And he said terrorist 5 times. And he ended by saying, I have no idea why we can't just use US dollars. That was Congressman Sherman. Now, wait, don't give them any clues. Now, you all know which states are the most enlightened, and you all know which states are the most backward, right? Which state, and you're only going to get one guess, for $20 flash cash, do you think Congressman Sherman is from? You all know him. I don't have that much money. How did you do that? I think you were the first. Well done. Unbelievable. He's from Orange County, California, and that's his lovely face. And luckily, there was a hero in the audience. Well, there's a hero in Congress. What state do you think this one's much harder. Which state was the hero from? Which is the most backward state you could think of? No, he's not quite the most backward. Begins in M. It's an M. Mississippi is probably the most backward, right? Was that where Deliverance was made? Do you remember that movie, Deliverance? Yeah, fantastic. Virginia, no, I think it's too close to DC. So Tom Emmer from Minnesota was the hero, and he was amazing. I don't think I have a picture of him. Now, I still have money left, and I'm just finished now. That's the end of me. You'll see me again in a few minutes when we give you a product demo. And my next speaker is Brenda. But wait. For $20 flash cash, this is the last opportunity now. There's 4 clippings up here of recent, except for one, recent statements by either the SEC, the IRS, CFTC, which is the Commodity Futures Trading Commission, and FinCEN. And this one says, by and large, the structure of initial coin offerings involved in it implicate sale of securities, directly implicate securities registration, right? So that agency is saying it's a security. And then this is the IRS, and the IRS is saying it's property. Actually, I'm answering all the questions I'm promising you. And then this one down here, okay, we'll see if anyone can guess this one. There's only 2 left. This one says that it is a currency, right? So we've got property, security, currency. Which agency said it was a currency or commodity? Yes, FinCEN. Who said FinCEN? Okay, where's my courier? There you go. Yeah, I still have more money left, luckily. Yeah. And sorry, that was commodity, and this one is currency, and that's CFTC. So in the US right now, it is an absolute nightmare for entrepreneurs like me and those who want to be in this space, and for lawyers like Steve, because not only is the regulation changing, but every agency is putting their foot on it. And this is just the tip of the iceberg. Because if you're not a security, you have to worry about the 50 states, because every state has money transmitter laws. And we have another lawyer who's not here, called Jeremy, who's a great guy, who sent me an email last night and said, Jodee, good news, we think you may be able to do business in 33 of the 50 states. And that's great. Okay, over to, may I present Brenda? Come on over. Here, you can have this one.
Hello, how are we all doing tonight? My name is Brenda Saveluc, and I am an Australian qualified corporate and commercial lawyer, but I have a real passion for blockchain technology and cryptocurrency, and that's pretty much what I've been focusing on for the last couple of years. So I thought it'd be pretty useful to talk to you guys tonight about some global trends that I've noticed, try and keep it as short as possible. So what I'm hoping to give you guys to come away with tonight is that when you guys are looking at doing maybe an ICO, a token sale, whatever you want to call it, here's a couple of general broad themes that you might like to think about. We've already discussed tonight whether these things are securities. It's really, really important, as we've heard Jodee talk about, and I'm sure Steve is going to talk about as well, figuring out what are these products that we're actually issuing to potential customers. I'll chat through some of the anti-money laundering and counter-terrorism financing requirements. Consumer protection, again, really, really important, especially when you're putting out any type of advertising material. That it could include a white paper, it could include content that's on your website. Are you a money transmitter? Is it a commodity? Lots of questions to be considered when you might be thinking of doing a token sale or an ICO. And as Jodee said, this is really just the tip of the iceberg. I'll try and keep you short. I know people don't like lawyers talking legalese for too long. So first of all, thinking about whether your product that you've created is a security. It's very, very critical to not only, to really try and understand if it has any of the characteristics under existing securities legislation. So for example, does the token that you've created have rights to participate in profits? Is there any kind of voting rights that the token holders might have? Do they get to say in how the company is being run and what the company is doing? Is there any kind of ownership of a legal entity? Or maybe, is it a derivative style security where it might be based on the price of an underlying asset, say the US dollar or gold? Is there an initial investment that's going to be settled in the future? Are there vesting conditions that attach to it? These are all questions that are really good to consider to try and figure out, okay, is what I have an actual security? And I think gone are the days where you can simply label something as being a utility token without actually going through the effort of analysing in great depth as to whether or not you have a security. I think that there was this trend when, Bitcoin and cryptocurrency, and everyone was doing an ICO last year, and a lot of them said, oh, no, we're just a utility token, we're not securities, but didn't actually go through and analyse each and every single one of these factors to figure out whether or not they fall in legislation. So I think gone are the days, and I think the regulators are much smarter these days and a lot more aware of what's going on. And it's not easy, as Jodee's described. Lots of legal work, lots of things to be considered. Anti-money laundering and counter-terrorism financing. Regardless of any legislation across the world, I don't think any of us want to support bad actors or to be implicated in anything to do with the T word. So it's not only about looking at what the regulators are saying, but it's getting yourselves comfortable with who are the users of your product. What are they actually doing? Do you know who they are? Do you know who's holding your tokens? And it's actually a really interesting question to consider. At what point do you do your anti-money laundering and know your customer checks? Is it right at the beginning when you sell? Is it when they try and take it off the platform? Is it in the middle somewhere? It's also really important to consider what kind of data you're collecting from them. Is simply a passport or a license enough to satisfy yourselves of who these people actually are? Do you collect data about what is actually happening with the volume of transactions that's going through either your platform or what's actually happening with your token or the digital asset that's out there in the market? And it's not only about setting up your AML CTF plan at the start, but it's also about ongoing due diligence, because your responsibilities don't just stop when you do an ICO, you get all your money and you're walking to the bank to cash a big check. There's ongoing due diligence, and it's really, really important to keep on top of ongoing obligations that you might have under AML CTF. And we've seen this in pretty much all jurisdictions in the US, Australia, Europe, Asia, everywhere. Trade practices and fair trading is an interesting one, because it's been another theme that we've seen throughout the world, really, where whenever there is any kind of advertising material that's put out there, whether it's through a white paper, whether it's content on your website, it's really crucial for people to have a really clear idea of what they're getting and what they're not getting. So, for example, what claims are you making as part of your white paper, and do you have evidence to support every single tiny claim that is made in there? Regulators, this is low-hanging fruit for regulators to pick up a white paper and say, hey, where did you come up with this growth number or this profit number that you're promising people? Really, really low-hanging fruit for them. So my advice has always just been to make sure that you have evidence to substantiate literally everything that you put out there. And what is the general impression that you're giving your users and your token holders? Even being unclear or perhaps unintentionally ambiguous can sometimes be misleading or deceptive. So I'll give you a really good example with the Crypto.Ƙred product. Jodee mentioned that it's built on both the Ethereum and the Stellar network. The Stellar network is what the product is naturally built on, but users can choose to switch that over to Ethereum, but they incur gas charges. So in the white paper for Crypto.Ƙred, for example, there's a very, very clear diagram that shows that the users will be responsible for any gas charges that might be incurred throughout this process of converting it from the Stellar network to the Ethereum network. There's also a very clear indication of where fees are charged along the way. What are you going to be charged for and when? Very important to be very clear and as crystal clear as you possibly can be. The money transmitter question, and I think after the FinCEN letter to the Senate a couple of weeks ago, this one is at the fore of really everyone that's thinking of doing an ICO or creating any kind of digital asset. So although money transmitter is one that has kind of come to the fore of the industry, it's not only about money transmitters and licensing, but it's also about thinking whether your product falls into any other type of regulatory regime that you might need a license for. Are you providing a financial service? Is it akin to providing broking services? Are you engaging in some kind of banking product? Again, all of these need to be carefully considered in every single jurisdiction that you're thinking of issuing tokens or any kind of digital asset. And again, ongoing legal obligations, not just for when you set it up, but for continuing throughout the process. So that was just a quick 101 of a couple of key themes to consider from a legal aspect in pretty much any jurisdiction. So again, securities, we talked about some of the AML/CTF requirements, money transmitters, and any other licenses you might need. So.
And I just want to say, Brenda is an absolute pleasure to work with. So if any of you are doing an ICO and thinking of things outside the US, it's yay, go Brenda. Thank you very much. So while Brenda's been speaking, Cameron has been working away and he has created some coins for you, some Crypto.Ƙred coins of you guys. And some of you might remember that we were taking photos while you were eating pizza and doing stuff. And so we're going to show you after Steve. Come on up, Steve. We're going to show you some coins of you guys. Next one. Welcome, Steve. So Steve, I said before, Steve is an amazing entertainment and tech lawyer, one of the best that I've worked with. And what I love about Steve is he really thinks about business issues and not just the law. And he made that point in our first meeting. He came to the first meeting at Gratitude Cafe on his skateboard. So he's a cool guy.
Hi, everybody. Thanks for that introduction. I really appreciate it. My name's Steve Masur. I am a partner at Masur Griffiths. It's a law firm in New York and LA and Boston. Hopefully someday we'll be in San Francisco too, hopefully someday soon. And I'm curious, I sort of want to, have a conversation with you, and to know more about why are you here? Why are you here? Is this, what do you want to learn about, and what's exciting to you about what we're doing here? Do you want to hear more about the legal issues? How many people want to hear about the legal issues in the US? Okay, a few people. And how many people want to hear about sort of the industry of blockchain and cryptocurrencies and what's happening right now? Okay, good, about equal. So I'll try to split it. So I started my practice in the early 90s and as an entertainment lawyer and a media lawyer. And what happened is I started getting a lot of questions from internet companies. So I kind of immediately went into the internet business. And the reason I'm telling you that is to give you a little bit of a history of the crypto space. So the internet was comprised of 5 very simple technologies. And the one that never really came to the fore is cryptography. And the crypto people were the people who were behind the cyberpunk and the cypherpunk movements. And those people never really got to see their day in the sun. And crypto is those people's technology. And so I think it's important to understand that, because those people are sort of anarchic and they're anti-government, and they were sort of thinking about, okay, we've created this new technology which allows for value on the internet, because the internet, that was the one thing the internet didn't really have, is value. Everything's free on the internet, right? So crypto allows there to be value on the internet and the exchange of value, which is a huge concept. So if you think about the mindset of these people, they were kind of trying to think, okay, how do we roll this out? Let's mess with their money first. Money's important, right? So of all of the different applications of blockchain technology, they chose money to try to get the word out, and it worked extremely well. Everybody talks about cryptocurrencies, and they talk about ICOs, and they talk about people making millions of dollars, and that has put the world spotlight on this technology. But the technology is really early, and it's extremely early days in the technology, and there's a lot of problems, and that's one of the reasons why the legal situation is what it is, especially in the US. The US has something of a decentralized government. The reason I'm saying it that way is to use a blockchain word. We create these bubbles. So like if you think about when the FBI was created in reaction to the alcohol trade. And the DEA was created, the FBI could have done the DEA's job, right? But we created the DEA in reaction to the drug problem. So it's kind of like bubble governance, right? And so that's why we have all of these different competing agencies that are interested in tokens. And most of the conversation is still just around the tokens. So if you think about all of the different technologies that the blockchain enables, it's just a giant amount of change that we're going to see in the next 20 years, and money's just the beginning of it. But just as everyone has said, the securities laws apply, the commodities laws apply, the money rules apply, and then the ones that nobody's even talked about yet. For example, sweepstakes and gaming regulations apply. All of these things apply. Well, I don't think they really do. I mean, I think that eventually we're going to shake out to a set of rules that works for the technology, but we're in the middle of this sort of chaotic period where there's sort of a fraud happening, and there's also growth, and there's also technological development. So it's really a chaotic moment, and that it's going to be a lot more painful than the development of the internet was. I mean, the internet, we didn't have a lot of legal problems, really. I mean, we had copyright infringement, we had disruption of, for example, taxi and limousine commissions. But I mean, the kind of poo storm, let's put it, that is happening with this is much bigger and much more interesting, I think, from a regulatory perspective. I don't want to take too much more of your time, but that's.
Why don't we ask, guys, do you have any questions?
You talk about kind of bulk organizations that pop up throughout history and so on and so forth. Do you imagine like a crypto agency that's run by the Fed just to regulate it all as a whole? Because like you said, we're at a point where it's early, so too many conflicting regulations trying to.
That's a really good question. What's going to come up to regulate this? I think, I could sort of predict which agency I think it will be, but ultimately it's going to be up to the legislative branch to make that decision, and that's what came out in one of the recent hearings, in the Senate hearing, where essentially the regulators were saying, you guys have to tell us what you think. We think if we just apply our regulations, we think our regulations apply. And they had the heads of two agencies, both of whom said the same thing, both of whom acknowledged the value of the technology, both of whom said that they wanted the technology to grow and they didn't want to over-regulate it and scare everyone offshore, which is exactly what they're doing. And both of them kind of looked to Congress to say, or to the legislative branch to say, you have to tell us what to do with this. So it's going to be interesting to see what they say. If I were to guess, I would say that they try to create, essentially, they won't create a new one. They'll give it to one of them. And if I had to guess which one that would be, I would say it would be the SEC.
Assuming that they raise the money privately and they bypass over the next year or two all this homework. Yeah. But they come out with a product that somehow implements blockchain quality. Have you any sense that they may encounter problems in terms of operating a business?
Yeah, I would say that's already happening, where you see, you've seen this before in the technology business, where technology companies will bump up against the law and they'll simply change their product to make it fit the law. And you're seeing a lot of that in the blockchain space. And I think the two attributes about, and actually this keys off of something that Brenda said, that there's a few attributes about cryptocurrencies that make them, in my view, different than securities. I mean, they look like securities. I get why everyone says that, but one of the differences I think is important in that is the difference of utility. So if you apply taxes and you apply friction, let's call it regulatory friction, then in fact the tokens don't work with some of the people's business models. So yeah, I think it has to be regulated differently.
I think Harry had a question, but Harry, we might come back to you in the end, and there's another question at the back. We've got 2 more presentations, and Cam, do I need to do something now? That's what I do? Okay, great. So I'm going to tell you a little bit about our product, and I've already said it's continuously available, and it's both fungible and non-fungible. And I need someone from the audience to explain what fungible means. Someone? Scott, do you mind again? Go ahead. Excellent. That's fungible. And non-fungible is a collectible, right? Non-fungible is something that is different. And so who can tell me what tell me what a 100-year-old silver dollar is? Is it fungible or non-fungible? A 100-year-old silver dollar, what is it? Yeah, I think you know the answer, Scott. A 100-year-old silver dollar is non-fungible and fungible, right? Because you can use it as legal tender for $1, or you can go along to the collector's shop and sell it for whatever it's worth, a few $100s. So our product is both fungible and non-fungible, because we take a basic unit of value that's an Ethereum token, and we add it to a collectible, and I'm going to show you what that means. And we say that by doing that, our little dude watches it in the river of social actions, and it stands out. So it's powered by both the Stellar and the Ethereum blockchains. Any idea why we did that? We used Stellar because it was really fast and cheap. And we used Ethereum as well because a lot of people wanted things to be recorded on the Ethereum ledger. So how does it work? So you start with a basic coin. In this case, it's my highest kiteboard jump. You can see the name on it. So you name it. That is actually me. Only those in the audience get to see this photo. Our white paper has someone else, but that's me. And then you pass the coin around, and whoever touches the coin becomes part of my network. So we call it a coin for engagement. So we're actually using the ERC-20 protocol to create engagement. It's like a baby network. One of our social network leaders, Chris Brogan, said that it's like a sort of a little baby network in a box. And so here we end up with my kite surfing coin, and everyone in the network who's touched this coin or has one can actually be part of the conversation stream, and I can connect with them. So if I gave you all coins tonight, and I've already given some of you $20 notes, if I also gave you $1 equivalent coins, when you leave tonight and you wake up tomorrow morning, we can all be connected. And that's what turns me on about this. That's what gives me goosebumps, that we're actually creating a collaborative product, and that we're moving the blockchain from a speculative product to something that can be really used to bring people together. And for those of you who think that my baby kiteboard jump there is really cool, you can buy it for 1.1 CKR, which is $1.10, which is an amazing deal, I think. Here's my collection, and Cam's going to show you a collection with some of you in it in a minute. When you look at my collection, you can like it, and you can buy it. When you buy one of my coins, you get to connect with everyone who is connected with that coin. So you actually, what we're doing is we're monetizing social actions. And I said before, if I made duplicate coins and gave them to all of you, there's one really cool thing you can do. Everyone who has the same type of coin can actually be connected to everyone else who has that coin. We call that mesh. And then we do a little party trick, which we might do for you guys, where we have a celebrity, who, in this case it's me, and I say, who wants the coin? And I give you a phone number, and you text me, and I go, oh, okay, I'm going to release the coins to you guys. So I essentially throw coins back into the audience by releasing your requests, and you go away tonight with the coins actually on your phone. That's what we call our party trick. And Cameron might do that for you later. And then here's the tech. Does anyone want to know about the tech? Are there any techies here that want to know about the tech? Yes? Sorry, I forgot your name. Mark, sorry, Mark. Don't have my glasses on. So the tech is an ERC20 token that's fungible, and you dress it with my beautiful kiteboarding picture, and as long as it's on the Stellar network, it becomes an IPFS and ERC20 pair. But as soon as you move it to Ethereum, it becomes an ERC821, which is a collectible token. That's the tech. If anyone wants to talk more about that later, we can. And this is more fun tech. So when you sign up on the platform, you get 2 free, and we're about to enter a trial period. In fact, the most important thing I have to say tonight is that for the next 5 weeks, we're in a trial period. And Audrey, I met Audrey last night. Say hi to everyone, Audrey. Audrey is a content creator and a writer, and I'm going to ask Audrey later if she can write some stories about some of the ways people are using our coins. Now, for the next 5 weeks, anyone who registers will get 10 CKR for free. We're not going to take your money. We don't want to collect millions of dollars. We're not doing an ICO. We're going to give you 10 free coins, and we're going to ask you to dress them and press them and mint them and turn them into something fun. And then we will feature your coins in our marketplace. And at the end of April, if anyone then wants to buy more coins, they can. And that's that process. This is the team who did this all in 213 hours. Oops. And now, oh my gosh, can we turn the video on? We have a sneaky guest appearance from Jesse Skinner. Jesse is our Canadian engineer who was meant to come to be here tonight, but he got stopped at the border. And would you stop a guy like that at the border with that hair? Anyway, he's talking right now, and this is online if you want to hear it. He's talking about how he built the product and how he got the coins to do all sorts of fun things. Take me offline. You can play a video in the coin, you can make the coin dance, you can make it jump. Here he is writing code. For those of you who heard about Twitch, the product. Cam, I think that's probably, Jesse gets 30 seconds because he's not really here. And I would now like to switch over to a quick live demo. And then we're going to finish with Jenna. So, Cam, I bring the mic over and you can tell everyone what we're doing. Just come over for 1 second and meet. This is Cameron.
Hi everyone, nice to see you again.
Cameron and I have worked together for 5 years.
It's been a pleasure.
It has been a pleasure. And tell them what you're going to show them.
So I'm going to show you, you probably saw me taking photos of a few of you. I'll show you some coins that I created with those photos. So we've got a photo here of Ron and Jodee on a coin. Carl and Harry. We've got a Ron and Jodee. Another one with just Ron. Sima, who was our fantastic Bollywood dancer who had to leave to go to dancing practice. And Brenda, who was speaking earlier tonight. And then we have this collectible coin of the dude who will actually let you take away home if you want by SMSing that number in with the party trick that Jodee mentioned.
So you can go online and you can acquire any of those coins. And once you acquire the coin, Cam's going to show you what you can do. Go ahead, Cam. So what are you doing right now? Oops. Here you go.
So this is the profile for the Ron and Jodee coin. Like Jodee was saying, we have this party trick where once you've created a coin, you can actually SMS a code to claim that coin. So you can see here, if you want to, if anyone in the audience, probably just Ron or Jodee, but anyone else, if you'd like to claim this coin, you can SMS 84601 through to this phone number. Otherwise, I'll show you another number that you can SMS in to claim a different coin. Yes, if you just send a message to +1 415 644 5733 with the code and your name. 84601 and your full name to 415 644 5733. Exactly. So what we'll see then is we'll see requests on the coin profile. Once we have requests, we can actually give the coin to that person. Alternatively, we can go through this process to actually give the coin to any phone number.
Just show them how to give the coin.
So we can enter a phone number or an email and send that coin. You can add a message when you send the coin. And that message can either be a public message, which gets displayed in the coin's profile. So like Jodee was saying, every coin's actually a community. So anyone that holds that coin will actually be able to see and engage with that message. So that's a way that an individual or a brand could share a message with a certain group of people as they hand these coins out. Or alternatively, you can check this box to send this as a private message, which goes through to the receiving person's inbox.
So we've shown this to about 25 or more social influencers. And what we've heard back is that they want to use this as a way of actually creating a valuable a valuable social action for their audience. And instead of just being a like that people forget about, the coin actually becomes something that people add to their collection to remember the celebrity or the influencer. And in my case, when I give this to people, I can then connect everyone who has actually touched the coin. Cameron, thank you very much. And for those of you who saw the coins that we've made for them, we'll make them available later on. Jenna, over to you. Come on over. So may I introduce Jenna? Jenna is a very, very smart accountant and tax accountant, and has done quite a bit of research thinking about some of the issues that people have in trading, speculating, and buying coins.
All right. Thank you, Jodee. Okay. Hi, everyone. My name is Jenna Eckerle. I'm a CPA licensed in California and New York. I started out at a Big Four accounting firm, and I did high net worth individuals for a bit, and I'm now focused on partnerships and LLC structures. So have a little bit of a varied background. So how many people here own at least one cryptocurrency or coin? Cool. How many people are developers of a cryptocurrency or coin? Less. Okay, cool. So everyone's favorite question, of course, is, do I have to pay taxes? And the answer is yes. The IRS issued notice 2014-21, a couple of years ago, which stated that cryptocurrencies are treated as property. So they're subject to the property transaction rules, which in general means they receive capital gain loss treatment. So the way the tax code defines a capital asset is they say property is a capital asset unless it meets one of these exceptions. And one of those exceptions is if it's inventory. So if it's in your normal course of business to be producing and trading these coins, and this is your cost of goods sold, then it would not be a capital asset. That would be one of the exceptions. The situation that IRS notice there mentions is for Bitcoin miners, for example. So if you're mining Bitcoins and that's your ordinary course of business, then that would not qualify for capital gain loss treatment. That would be considered ordinary and also subject to self-employment tax. So that IRS notice, by the way, it's 6 pages long. It's in the format of frequently asked questions. So it's an easy read. It's on the IRS website if you want to read through the whole thing, but those are kind of the highlights. So what if I don't pay taxes? What if you don't report it? This is similar to the cash market economy, right? So if you work mowing lawns when you're home from college for a summer and you get paid $1,000 in cash, most people would not report that to the IRS. Technically, you should, and there's risk. You take the risk that the IRS comes in on it to you, but it's similar to that situation. The correct answer is yes. Do people do it? Always. It depends. An important note about the Form 1099s is that if you do receive one from a brokerage firm saying this is what your training you did, if you're getting one, the IRS also got one. So the entity that filed it sent a copy to you and sent a copy to the IRS. So that's not a similar situation to mowing lawns when you're home from college. They're aware of that income and can easily look on your return and see if it's there. A good example of this is Coinbase, the situation that's going on with that. So I don't know if you guys are up on the latest on that, but the IRS sent them a subpoena asking for information on every single customer, trading activity, conversations with customer support, IP addresses. It was this really broad subpoena that they just essentially wanted all information. Yes, Steve?
They want to tax you on every single trade, right?
Exactly, that's exactly right. They want to see, so the latest statistic I read is that between, the latest stat I read was that between 2013 and 2015, approximately 800 people per year reported capital gain losses on sales of Bitcoin or other virtual currencies. So 800, yeah. So they, of course, don't know if that could be 100%, that could be 1%. It's pretty confidently probably not 100%, but they just don't know they don't know, right? They can't tell. So that's a perfect example of Coinbase where they're attempting to get information on the customers, and even if they don't know yet what your gains and losses are because you didn't get a 1099, that's something that could potentially happen in the future. So something to keep in mind. The Coinbase situation is still progressing, so Coinbase kind of said that's way too broad. If they gave, they responded to specific requests for specific people if they asked to the subpoenas, but this is still being hashed out, so stay tuned for news on that one. And one other item to consider too is that the Internal Revenue Code does have provisions for substantial underpayment and accuracy related penalties. So you can't just say, oh, sorry, I forgot to report that $1 million of gains that I made in my Bitcoin. I'll just pay the tax now. And it doesn't work like that. They'll charge you penalties, interest, and then also, if they wanted to, additional substantial underpayment and accuracy related penalties on top of those others, which could be up to an additional 20%. So, yes. Okay, so when do you have to pay taxes? Selling a coin for cash. So if I have my CKR Crypto.Ƙred coin that I bought for $1 and I sell it to Jodee for $10, I have a $9 gain that's on my tax return. I pay capital gain on that. Pretty straightforward. Another taxable event is if you trade it for another coin. So this is somewhat new news due to the recent tax reform. So the tax code has a provision for like-kind exchanges, or 1031 exchanges, they'll call them sometimes, where you can, do you know what that is, or is that too simple? So for example, if you had if you owned an apartment building and you said, oh, I want to sell this one and buy a different apartment building across the street, the IRS would say, okay, you don't have to pay the gain right now on the sale of that since you're buying something substantially similar. And it's not that you never get to pay, you don't ever have to pay tax on the gain, it's just deferred. So your basis in the new property would just be less by the amount of gain that you didn't recognize. So then when you sell that next property, you're essentially picking up the gain from the old property. So it's not tax-free, but it's tax deferral, so you wouldn't have to pay it until later on. So that provision existed. It was somewhat debatable earlier if that could be used to apply to cryptocurrencies. So if you traded for one for the other, if that would be considered like-kind exchange. But the tax reform that was enacted late at the end of last year removed the provision for using like-kind exchanges except for real estate. So now real estate is the only arena where you can use this like-kind exchange concept. So if it was debatable before on cryptocurrencies, it's a definite no now.
So if you buy Bitcoin and then you swap it to Ether,
Mm-hmm.
you got to pay tax on the Bitcoin transaction, irrespective of whether you make a gain or loss on the Ether transaction.
Exactly. So they're saying it's essentially, so here, let's go to the next slide. This has kind of an example we can walk through. So if you purchased $500 worth of Ethereum, 2016, the next year you want to trade the Ethereum has gone up in value, it's now worth $5,000. And you say, okay, I want to trade this Ethereum for Stellar. So you make that transaction, 5,000 for 5,000. The IRS says you technically sold your Ethereum for $5,000 and had a $4,500 gain, and then bought $5,000 of Stellar with that $5,000. So if the old rules were in place and they were still allowing like kind of exchanges and you could get comfortable that you could apply that to cryptocurrency, then there'd be zero gain. And then your basis in the new Stellar of 5,000 would be 500. So then whenever you sold that Stellar is when you'd recognize the 4,500. It would be when you sold the next one, not currently. So does that make sense of why that's the main difference? Sort of. So then another thing to be a kind of unintended consequence of this could be that with all the market volatility in the cryptocurrency world is that you could have this gain in 17, you trade it, and then by the time you have to pay your taxes in April of 18, the value of your 5,000 Stellar could be at 1,000 now, and now you owe 1,350 of tax on that $4,500 gain, which even if you sold all your holdings wouldn't even cover. It's just things to think about.
What strikes me about this is that you could make $4,500 at the time of the trade event, but when you come to pay your taxes, if the coin has gone down in value, you're actually essentially paying much higher tax as a percentage of the gain, because you have to finance the $4,500 from your remaining coins, which now are worth less. That's the point, isn't it?
Yeah, that could be.
It's a terrible mess, and it has to change, I think. Todd, do you want to help with this?
Well, but wouldn't this only apply if you're dealing with a coin as a readily tradable value? There's an actual fair market value. You're dealing with, your coin, for instance, the Crypto.Ƙred coin. What is the fair market value? So if I'm trading a Bitcoin for a Crypto.Ƙred coin, or multiple Crypto.Ƙred coins, has a transaction truly occurred? Because what is the fair market value? I mean, that's a bad example because it's a Bitcoin, which has a value. But for instance, there's other companies out there creating both security and utility coins where there is no market, and so there is no readily fair market value.
Yeah, that's a very good point.
How can you actually have a taxable transaction when there is no fair market value? So I've actually been advising my clients for that second one, trading coin for coin, unless you're doing Bitcoin or Ethereum, it's not an actual tax.
It's not an issue. That's a really good point.
There is no tax.
So everyone,
What's the value?
you might remember I introduced Todd before. Todd is our amazing accountant, and I'd love you to write a blog post about this. Go, Todd. Do you want to finish?
Yeah, well, I want to keep talking about that for a second. So because the tax, as of 1/1/18 now, this tax reform that kicked in, are you still advising them and saying they could still fall, even though it's saying now you can't use this except for real estate? Are you still saying it's okay since there's no readily ascertainable value?
What do you want to tax it?
Right, no, it's true. That's fair, yeah.
Okay. I mean,
Right, how are they going to come in and say you owe?
until you're actually trading this coin for something of value, either payment for services or you're obtaining another tangible item that has a readily fair market value. I mean, I have a client that does their main business, this goes back to your other point, their main business is blockchain APIs, and they do mining kind of as a side project, if you will.
Okay,
So I'm kind of treating all that, but they're mining other currencies that may or may not in the future have value. And so, I mean, as I'm seeing it, it's kind of a crapshoot whether or not that's actually going to ever have value.
right.
So I'm treating them just as capital assets until such time as I actually transfer those to someone else in exchange for services or in exchange for other goods, or you're actually monetizing that coin in some way, shape, or form, or you're converting it to Bitcoin or Ethereum or that have a fair market value on the market.
Perfect segue in back. Let's go back to this slide. So that's another taxable event too, is if you accept for services. So like you said, if I if I'm charging someone 10 grand to do their tax work and they give me 1 Bitcoin, I have 10,000 of income. It doesn't matter that it wasn't paid in cash, or essentially I've gotten a Bitcoin and then I have 10,000 of income, and if I sell it right away for $10,000, then I have zero gain loss, and that's fine. I just have my 10,000 of income. If I hold it for a year and I sell it when it's 12,000, then I'd have an additional 2,000 capital gain loss. So we cover those. Okay, so the other taxable event, the third bullet, is using a coin to purchase something. So if I went on Expedia, I don't know if they still accept Bitcoin or not, but I know like Expedia, Overstock, if you went on there, purchase something with your coin, that's another taxable event. They're saying you essentially sold your coin for the fair market value now, and you have gain or loss, and then you've used it to purchase something. So that gets into the kind of challenges of reporting requirements, because if you're using it on a regular basis to buy things, you'd have to keep track of, all the transactions you're making. So if I bought that plane ticket on Expedia with my Bitcoin, I'd have to go in and say, okay, here's this Bitcoin that I own in my portfolio. I have to mark down that I sold it. I used to pay for a $500 plane ticket. So whatever my difference between $500 and the cost basis is would be a capital gain loss. So for some people that might not be a huge deal. It'll be easy enough to report on returns. For perhaps hedge funds or cryptocurrency-based investment funds that have hundreds of transactions per day, that would be significantly more challenging. There are some exceptions to having to report it line by line by line. If you file an 1120S or 1065, so essentially if you're an S corporation or a partnership and you have more than 5 to list out, then you can just do details available upon request and put the summaries on there. And I mean, you have to have the support ready, of course, in case they ask for it and want to audit it, but you wouldn't have to give the line by line detail of it. Individuals don't have that same exception, but they do have 2 other exceptions they could use. You can, if you receive a 1099-B from a brokerage, so if Pershing sends you a 1099-B, here's your capital gain losses for the year, you can say, okay, here's the total from my 1099, I'll just plop that number on there and I'll attach all my 1099-Bs to the return to kind of simplify things. And I also noticed, so other available tools, I also noticed Coinbase in the recent times released a tool too, where it seems like they've been helping you to pull out and track your cost basis at least. So you can see what the cost basis is of what you've sold and print out reports that way. Awesome. I need to speed up, right? All right, let's get, yeah, this is it. Okay, so last thing, maybe I'll skip over that first one. Tax planning, cryptocurrency friendly states. Wyoming, that's new news. As of March 6th, they released the House Bill 70, which says that cryptocurrencies are exempt from money transmitter rules and property tax. Arizona has 2 bills that they recently introduced as well that would potentially let you pay your taxes with Bitcoin. Delaware has a blockchain initiative. I know there's a House representative from Tennessee who's been championing for kind of favorable rules for cryptocurrencies and that sort of stuff. And then others, just general tax planning strategies of states with lower income tax. So if you're going to plan on having huge capital gains, does it make sense to live in California where you're paying up to 13% state tax rate versus going to the other side of Tahoe and Nevada and paying 0% state income tax rate?
So is that a taxable event if you're paying taxes with Bitcoin?
Great question. I think it would be, because I don't know, you'd think so.
I think it's a mess. I think the whole thing is a mess at the moment, from tax point of view and a regulatory point of view.
Yeah.
I'd like to finish up.
Yeah, that's fine.
So thank you very much, Jenna. That was fantastic. And anyone has any questions later, please. Jenna's going to be around for a little while, so will Brenda and Steve. And I know it's getting late. If anyone wants to ask just 1 or 2 questions, go for it. But I'd like to finish up really soon. And you've been an amazing audience. You've absolutely been fantastic in the way you've asked lots of questions, and I've been able to give away $100 cash to you all. So thank you for that. It's a privilege. Harry.
Jodee, I'm interested in kind of the inside baseball on who the big lobbying influences are that are weighing in on Congress. I mean, they don't do anything on their own. So where's the political weight?
That's such a good question, and I was just in DC last week and met a very, very capable lobbyist. And when I told her what we were doing, she was very interested because she said there's a real concern in federal government about what happened in the last election vis-a-vis social networks. And she saw Crypto.Ƙred as an interesting story to tell the congressmen and senators about how people can actually create their own networks outside of Facebook or Twitter or LinkedIn. I don't think that's answering your question because I don't have a good answer. When I'm in DC, there aren't that many people in federal government who are really aware. Tom Emmer was very, very impressive from Minnesota. You get the transcript of what he said. He was fantastic. He was very pro. But there are a lot of people who are negative because what they're hearing about is the fraud and the issues from their electorates. So there is an issue in federal government. It's more negative.
What's Goldman saying? You know what they're
No, I'm not
doing?
sure.
I mean, they're kind of the axe here, right?
Yeah.
They're saying, I mean, if you want to talk about Jamie Dimon,
Yeah, I've read some of his comments.
Mm.
saying, I can't play, so it's
Right,
I
right.
don't want it. It should be outlawed. Only money should be allowed.
I think I know the Goldman guys well enough that somebody's working on a plan there, right?
Yeah, I think that's right. I mean, I'd like to put a little team together and we'll jump in the bus and go and see Congressman Sherman down in Orange County and tell him what we think about his crypto is crock. Anyway, I need to finish up. What time is it? It's late.
Well, if you were in LA County, you would be voted out.
7:51? Okay, so one more question and then we'll finish up. Is there one more at the back there? No, we're all good. Okay, guys, thank you very much. You're fantastic, and thank you. And
Thank you.
and we'll send you all emails later if you'd like to be coin owners. Thanks.